The world is holding its breath. In offices, homes, and trading floors across continents, people are glued to their screens, waiting for the next headline, the next market swing, the next sign of what's to come. The world is holding its breath. Every flicker on the financial ticker, every shift in the news cycle, is met with anxious anticipation. The uncertainty is palpable, stretching from Wall Street to Shanghai. The world is holding its breath. Airports, boardrooms, and living rooms are filled with worried faces, all aware that something big is unfolding, something that could change the course of history. The date is October 27, 2025, and the trade war between the United States and China is back, bigger, bolder, and more dangerous than ever. This isn't just a continuation, it's an escalation, a new chapter that's rewriting the rules of global commerce. The fragile peace has shattered, replaced by a seismic economic conflict shaking every corner of the globe. The aftershocks are being felt everywhere, from the world's largest cities to the smallest rural towns. For a while, diplomats talked and goods flowed, but it was only the calm before the storm. Behind the scenes, tensions simmered, and now, the storm has broken with full force. Now, with President Trump's dramatic return to the White House, the world's two largest economies are locked in an unprecedented standoff. The stakes are personal for leaders on both sides, and the world is watching every move. This isn't about minor trade tweaks anymore. It's about knockout blows, strategic blockades, and a fundamental rewiring of the global supply chain. Factories are idling, ports are jammed, and the flow of goods is grinding to a halt. The stakes have never been higher. Every decision, every tariff, every sanction has the potential to trigger a global domino effect. Every headline, every market tremor, every government press conference is another move in a high-stakes game of geopolitical chess. The world's economies are the pieces, and the board is more volatile than ever. The language is no longer diplomatic, it's the language of economic warfare. Negotiations have turned into battles, and every word is carefully chosen to send a message. Words like retaliation, leverage, and national security dominate the conversation. These aren't just buzzwords, they're the new reality shaping policies and lives. This isn't a distant problem for economists, it's real, and it's happening now. The impact is immediate, and it's being felt in every household, every business, every community. It affects the phone in your hand, the car you drive, and the price of your groceries. From electronics to everyday essentials, nothing is untouched by this conflict. The era of quiet negotiation is over. Economic confrontation has begun. The doors to compromise have slammed shut, replaced by a new era of open rivalry and brinkmanship. So, how did we get here? It was a 1-2 punch that caught the world off guard. The escalation was swift, and the consequences are still unfolding. First, a stunning declaration from Washington that sent shockwaves through international markets. Investors scrambled, currencies tumbled, and uncertainty soared overnight. Then, a powerful countermove from Beijing, targeting the very building blocks of modern technology. Rare earth minerals, semiconductors, and critical components suddenly became bargaining chips in a global power struggle. This isn't just a sequel to the last trade war, it's a whole new beast. The rules have changed and the consequences are more unpredictable than ever before. Let's break down what this all means for you. Whether you're a business owner, a worker, or a consumer, the ripple effects of this conflict are already at your doorstep, and they're only just beginning. It all started with a single explosive announcement that sent shockwaves through the global economy and left both Wall Street and Main Street reeling. President Trump, seated once again in the Oval Office, stunned the world as he declared a sweeping 100% tariff on a massive list of Chinese goods, an unprecedented move in modern trade history. For every dollar's worth of a product imported from China, U.S. companies now pay an extra dollar to the government, effectively doubling costs overnight and upending decades of established trade flows. The goal was clear: cripple Chinese exports, disrupt their manufacturing dominance, and force American companies to bring jobs and production back home, reigniting the spirit of Made in America. The White House argued this was the hammer needed to finally level the playing field after years of what they called unfair Chinese trade practices, intellectual property theft, and currency manipulation. The message to global corporations was unmistakable. If you want to sell to America's vast consumer market, you need to build factories and hire workers right here on U.S. soil. The list of affected items was vast and touched nearly every American household. Everything from high-tech electronics and auto parts to clothing, toys, and everyday essentials. American supply chains, which for years had been optimized for efficiency and low cost, were suddenly thrown into chaos. Delays, shortages, and confusion rippled through warehouses and retailers nationwide. CEOs and business leaders scrambled to absorb the skyrocketing costs, pass them on to consumers, or desperately search for new suppliers outside of China, each option fraught with risk and uncertainty. This wasn't just a policy shift, it was a bold declaration of economic independence, a gamble with immense risk that threatened to reshape the global order and redefine America's role in the world economy. Companies now faced a brutal choice: eat massive losses or raise prices, fueling a new wave of inflation that hit American families at the checkout line. The tariff hammer had fallen, and its impact was only just beginning to ripple through every corner of the economy, from boardrooms to kitchen tables. The world watched anxiously for China's response, and it came fast, setting the stage for a new era of economic confrontation. China's response wasn't just another tariff, it was a strategic masterstroke that sent shockwaves through global markets. Instead of matching tariffs tit for tat, Beijing chose a move that would have far-reaching consequences for the world's most advanced industries. Beijing announced severe restrictions on the export of rare earth elements, a group of minerals that are absolutely essential for manufacturing modern electronics, renewable energy technologies, and even advanced military hardware. These rare earths are the secret sauce in nearly every piece of modern technology, from smartphones and electric vehicles to wind turbines and sophisticated defense systems. China controls over 60% of rare earth mining and nearly 90% of the world's processing capacity, making it the undisputed heavyweight in this critical sector. This dominance gives China a chokehold on global supply chains, allowing it to influence the flow of these vital resources to every corner of the globe. By restricting exports, China is squeezing the arteries of high-tech and green energy industries in the West, threatening to disrupt the production of everything from clean energy solutions to next-generation consumer electronics. American and European companies are now in crisis mode. Without a steady supply of rare earths, production lines could grind to a halt, putting thousands of jobs and billions in investments at risk. Prices for rare earths outside China have skyrocketed almost overnight, sending shockwaves through commodity markets and leaving manufacturers scrambling for alternatives. This move exposes a deep vulnerability in the West's economic model, one that relies heavily on a single country for materials that power the modern world. China is willing to absorb the pain of tariffs because it holds the ultimate trump card: control over resources that the rest of the world simply cannot do without. The trade war has now evolved into a resource war, and China just played its strongest hand, forcing the world to rethink its supply chains and strategic dependencies. Factories in the US and Europe are already slowing down, with some even facing temporary shutdowns as they struggle to secure the materials they need. The world is learning, perhaps too late, just how dependent it is on China's rare earths, and how vulnerable that makes the global economy. China's retaliation didn't stop with rare earths. Beijing imposed new, exorbitant port fees and inspections at major shipping hubs targeting US-bound cargo. These fees make it prohibitively expensive to move goods out of China, creating massive logistical nightmares for American importers. Ships are delayed for days or weeks, and cargo is held up for phantom inspections. Foreign companies in China face sudden audits, tax investigations, and regulatory roadblocks. Permits are delayed, licenses revoked, and executives tied up in red tape. The message: American businesses are no longer welcome. China's multi-pronged attack is turning the logistical backbone of global trade into another front in this escalating war. Faced with China's rare earth blockade, the US is scrambling for resource independence. The White House is fast-tracking investment in domestic mining and processing, pouring billions into reviving a dormant industry. The goal: build a mine-to-magnet supply chain on American soil. But the challenge is immense. Processing rare earths is complex, expensive, and environmentally hazardous. The US lacks the facilities and skilled workforce needed to compete with China. Building new plants and training workers will take years, maybe a decade or more. While the government invests in projects like Mountain Pass, these efforts won't yield significant output soon. In the meantime, American industries remain vulnerable. The scramble is necessary, but the road to resource independence is long and difficult. For now, China's grip remains tight. The rare earth crisis is a tale of two countries and two strategies. China's dominance is no accident. It's the result of decades of state-directed investment and a willingness to bear environmental costs. China holds the world's largest reserves and nearly 90% of global processing capacity. 9 out of 10 high-performance magnets in modern tech depend on Chinese processing. The US, by contrast, has reserves but only one active mine, and until recently, sent its concentrate to China for processing. This economic absurdity has become a glaring national security vulnerability. Decades of prioritizing cheap imports over strategic independence have left the US far behind. New investments are a desperate attempt to catch up in a race where China had a 30-year head start. The imbalance is a cautionary tale about ceding control over the building blocks of the modern world. The consequences are now impossible to ignore. This geopolitical battle is hitting home hard. The stock market is on a roller coaster with massive sell-offs after every new escalation. Billions in paper wealth have vanished, hitting retirement accounts and investment portfolios, but the pain goes far beyond Wall Street. On Main Street, manufacturers face doubled costs or outright shortages of key components. Small businesses struggle to stay afloat. Some face bankruptcy as their supply chains collapse. Prices for electronics, appliances, and cars are climbing, straining household budgets. The real-world consequences are piling up. In China, factories are seeing a collapse in US orders, leading to layoffs and unrest. Both economies are taking heavy blows. This is not a surgical strike, it's a brutal economy-wide brawl. Consumers and workers in both countries are caught in the crossfire. The question, which side can endure the pain longer? As the US tries to cut China off, Beijing is reshaping the global chessboard. China is redirecting trade to Southeast Asia, Africa, South America, and Europe, building new economic alliances. By diversifying export markets, China aims to cushion the blow from US tariffs and isolate America as a protectionist outlier. Other nations now face a dilemma: side with the US or seize new opportunities with China. The trade war has gone global, creating new fractures and alliances. Both Trump and Xi have staked their credibility on winning. Backing down isn't an option. Could we see even greater escalation? The possibility of a global financial crisis or a full-scale tech embargo is now real. The future is a minefield of unanswered questions. One thing is certain: the shockwaves from this conflict will shape our world for years to come.